Health Insurance Explained. Health insurance is an agreement in which an insurer agrees to pay part or all of a person's medical expenses in exchange for a premium. More precisely, health insurance often covers the insured's healthcare, surgical, prescription meds, and occasionally dental expenditures. It can either repay the client for illness or injury-related expenditures, or pay the hospitals or clinics directly. It is frequently included in company benefits packages to entice excellent employees, with premiums partially funded by the employer but frequently withheld from employees' wages. With some exclusions, the costs of healthcare premiums is taxable to the payer, and the benefits are obtained tax-free. Identifying and assessing the impacts of not having health insurance and having high uninsured numbers acknowledges that health insurance serves various and unique objectives and constituents. These goals include encouraging health, receiving health care for people and families, and financially shielding them from high health care expenditures. Health insurance pools the risks and resources of a big group of individuals to protect them against financially devastating medical bills caused by a sickness, accident, or disability. In addition to providing the conventional duties of risk insurance, health insurance has evolved as a method for funding or prepaying a range of healthcare advantages, including routine preventive care, the usage of which is neither uncommon nor surprising. Even though a big proportion of people with health insurance file claims each year, healthcare costs and consequently health insurance payouts remain focused among a relatively small group of applicants who suffer high costs for critical diseases. 10% of the world's population accounts for 70% of healthcare spending, a connection that has been steady over the last 3 decades. Thus, even as it progressively pays for routine treatment, health insurance continues to fulfill the purpose of dispersing risk. Insurance coverage provided by individuals helps healthcare providers secure a cash stream, and communities benefit from financially sustainable and stable healthcare professionals and organizations. Health improvement outcomes and standard of living are the ultimate goals of healthcare insurance for individuals and communities, particularly workplace communities of workers and business owners. Trying to link success in accomplishing these goals only to healthcare coverage presents a problem, since determining the proportional impact of many factors on individual and population health necessitates a sophisticated study. The relevance of health insurance has risen over the last quarter century as clinical care has gotten more skilled, technology innovations have become more widespread, and the spectrum of treatment procedures and costs has increased fast. We spend extensively on medical insurance as a whole through direct and personal spending, foregone earnings, and taxation policies. In various regions of the world, healthcare insurance has evolved into a widespread but not ubiquitous aspect of the employment agreement. Employees place health insurance far and away at the top of the list of employment perks. Despite significant efforts in personal and public finances to offer health insurance, many individuals remain uninsured. Core attributes of health insurance. This variation is reflected in significant discrepancies in healthcare spending. In 2016, the richest 5% of U.S. healthcare spenders paid for 50% of overall spending, or almost $50,000 per individual. According to health expenses, the lower half of the population contributed only 3% of overall health spending, or $276 per capita in 2016. People in both categories buy healthcare insurance, but the value they receive varies. In addition to assisting people in staying healthy and improving their health when they become ill, our health insurance system performs at least 6 roles to ensure that everyone benefits from being covered. These attributes, though, are often not mutually exclusive. People with major health occurrences are financially protected. Medical insurance, like auto insurance, offers protection from unforeseeable and financially disastrous situations. Severe medical occurrences, like vehicle accidents, are infrequent and impossible to foresee, and their expenses are substantially beyond most people's resources. Drugs to treat cancer or multiple sclerosis can cost more than $100,000, which is too expensive for everyone but a few. Organ failure necessitating a transplant might cost significant amounts of money. Policies to improve this function of health insurance include limiting yearly out-of-pocket payments, eliminating lifetime benefit restrictions, and assuring coverage for persons with previous illnesses. Although the basic goal of insurance is to protect against emergencies, the more prevalent role of health insurance in the United States is significantly more similar to a club card than vehicle insurance. Beneficiaries receive free or low-cost services, such as basic doctor visits, in return for a yearly subscription. These services, such as well-child visits for people with kids or prescription refills for adults on lipid-lowering drugs, are mostly predictable. Policies aimed toward the club membership function often seek to tailor policies to the requirements of individuals. Take prescription drug coverage as an example. Health insurers enter the prescriptions they are already taking to locate the plan that best subsidizes those things. Moreover, healthcare services are being negotiated. Health insurers use their market strength to negotiate price concessions from doctors, hospitals, and healthcare systems, or to exclude high-cost providers from their networks. Except for prescription pharmaceuticals, for which consumers frequently pay list rates even when they have insurance, covered patients can benefit from these reductions even while paying out of pocket for services. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Policies focusing on this function of healthcare insurance impact physicians' and hospitals' bargaining power with insurers. Medicare, for example, establishes payment rates through fee schedules instead of allowing healthcare systems to utilize market leverage to raise their costs. Both private and state insurance companies have also undertaken to measure initiatives to evaluate and improve hospital quality. Quality ratings that assist patients and plans choose which hospitals to use are one example, as is the restriction of specific hospitals from delivering particular sorts of treatments based on quality. Quality ratings are assigned to healthcare insurance programs. Healthcare insurers restrict cardiac valve replacement surgery to facilities with larger volumes and expertise. This attribute of health insurance policies focuses on more extensive metrics and quality measurement. Customers or subscribers are encouraged to maintain their wealth. For the last decade, health insurers have experimented with benefit designs that incentivize healthy habits. This includes premium discounts for people who join fitness centers or quit smoking. Another example is valuation healthcare insurance design. Individuals with this kind of health insurance pay little or nothing out of pocket for healthcare considered useful, including preventative services as well as certain drugs that avoid the consequences of diseases like hepatitis. Healthcare and life care. Most people confuse health insurance with life insurance. Healthcare insurance and life insurance are two of the most common insurance products. Both contracts are repaid over a certain period and provide a payout if certain requirements are satisfied. Simply put, health insurance protects you from financial troubles caused by medical bills incurred as a result of the disease. Meanwhile, life insurance generally delivers a lump amount of cash to your friends and family after your death. This lump amount is normally tax-free. As the name indicates, health insurance protects you and your family members by paying medical expenses incurred as a result of illness. Doctor's visits, hospitalizations, medicine, testing, and surgery are all covered by health insurance. It also pays out if you are diagnosed with any of the predefined catastrophic conditions, such as heart disease, stroke, or cancer. However, because healthcare plans do not include life insurance, there will be no compensation if you die as a result of your condition. Whereas health insurance is designed to protect the insured from economic damage, life insurance is designed to safeguard the insured's loved ones. It is especially beneficial if you are the household earner. Life insurance is intended to assist your beneficiaries in recovering from the loss of their provider by dispersing funds in the event of your death due to an accident or disease. You may also be eligible if you have a persistent handicap that prevents you from working and providing for your family. There are two forms of life insurance. Term life insurance, which covers you for a certain length of time, ranging from a monthly to many years, and whole life insurance, which insures you until you die. You are protected by health insurance as long as you pay the usual premiums. This is often an annual or monthly insurance that may be altered to monthly periods based on your preferences. As previously said, life insurance covers either specified years of life or your entire life. Some insurance can be fully paid up front or monthly over a set period. Aside from alleviating the financial strain associated with medical bills, certain health insurance carriers may repay a percentage of what you've already spent, even if you don't become sick. In certain situations, health insurance carriers will even pay a monetary incentive to people who are covered but do not submit a claim as a reward for being in excellent health during the coverage term. If you are diagnosed with a serious disease, several health plans may pay you cash. When it comes to life insurance, your beneficiaries might get the whole amount in your policy even if you haven't paid all of the payments. Term life insurance also allows you to recoup your premium payments if you survive past a set age. Some plans let you invest a portion of your amount paid in other financial products, generating extra income. Need for health insurance. Nobody expects to get sick or injured, and no one planned on a recent COVID-19 pandemic. Healthcare insurance, like vehicle insurance, protects you and your budget from the unexpected. An injury, accident, or serious sickness might drastically alter your status. While healthcare insurance is an expenditure, the cost of care without it may be far more than you anticipate. Going to the emergency department, visiting a doctor, and having tests and/or medical procedures performed, even if small, may rapidly add up. People who have health insurance are more likely to visit the doctor regularly for treatments such as yearly checkups, flu vaccines, and routine blood tests. We cannot emphasize the need for routine preventative care enough. Checkups and screenings may detect health issues before you are aware of them, potentially preventing a costly, significant disease and large expenditure down the line. If you are working, even if it is a little business, you most certainly have access to health insurance. Furthermore, if you are 26 or younger and your parents have health insurance, you may be eligible to join their plan. Individual insurance may be available to anyone over the age of 26 on or off state-run health marketplaces. Did you enjoy the video? Please hit the subscribe button, like, share, and comment.